This program is brought to you by realestate.com.au. Keep moving with Australia's #1 address in property.
It's great to have your company here on Business Now. Let's check out the home auction markets over the weekend. And with football finals and Bathurst, all those things out of the way, there was plenty of activity across the country. 2,203 auctions and a healthy 63.7% of those were sold. In Sydney, 902 auctions and the clearance rate ticked up back over 60%, but only just 60.3% there. In Melbourne, 835 auctions, and the improving health of that market can be seen with the clearance rate, which is a very healthy 72.7%. Brisbane had 73 auctions and just over 56% of those were sold. Adelaide does remain super duper strong. 45 auctions, 80% of those were sold. And Canberra had 71 auctions and 62% of those were successful. So let's bring in here Angus Moore, Senior Economist with REA Group. Angus, always good to chat to you. Can I just start with last week's surprise increase in the unemployment rate to 4.5%? So I just wonder, at what point do you imagine that the unemployment outlook starts to have an impact on the housing markets?
Yeah, great to be here, Ross. It's an interesting question because it sort of comes from two directions. You know, on the one hand, we saw expectations for a rate cut increase as a result of the fact that the labour market looks a bit softer than perhaps it had been. I'm maybe a little sceptical that that's going to have a big influence on the RBA. I think they're just laser focused on inflation at the moment, and you know what we see in inflation next week's really going to determine whether we see a rate cut this year or not. But you know, it removes some of the barrier to further rate cuts. So, you know, all else equal, that's a positive for home markets and for housing prices. The flip side, though, of course, is higher unemployment can potentially temper housing demand. You know, obviously, one of the big predictors of mortgage default is job loss. Higher unemployment makes that more likely. Though at 4.5%, it's important to remember, you know, while it has come up a lot from where it was, you know, 18 months to a couple of years ago, it's still very low by historical standards and still, you know, around the sort of level that the RBA would consider neutral.
OK, so the most vulnerable people, if unemployment does tick up, are generally those people who have just bought homes and so might be in negative equity. So that's the real issue when banks and mortgage insurers, even the government these days, might bear some of those losses. But it would seem what banks are telling us is that most homeowners have got themselves way ahead with their mortgages over the past 3 or 4 years or so.
Yeah, that's right. And, you know, probably even longer than the past 3 or 4 years for many people. You know, the fact that interest rates were as low as they were throughout, you know, the sort of early 2020s, you know, it's maybe hard to remember now, but, you know, we were at record lows and people maintained, you know, for a lot of people, maintained their repayments and so got way ahead on their mortgages. In addition, you know, in smaller markets, in places like Adelaide, Perth, Brisbane, the fact that home prices have increased enormously over the past 5 years, but even in the past couple years, means even for those people that do find themselves struggling to service their mortgage, they're still going to have a very significant equity cushion, which, you know, gives them options that are maybe not available to someone who didn't have as big an equity cushion. OK, so then on the other side of it is the supply side. So do you sense that higher unemployment and the prospect a person can't afford or may default on a future home that they buy might actually sort of discourage sort of those developers from going ahead and building more apartments, building more homes? Yeah, it's a great question. And, you know, certainly what the outlook for supply is kind of one of the key questions in housing markets at the moment. You know, obviously the National Cabinet has that target to build 1.2 million homes over 5 years. We got some data from the ABS out on building commencements and completions, that is starting and finishing construction. And, you know, we're just way behind the pace that we would need to hit that target, you know, sort of circa 25 to 30% below the sort of pace that we would need. And that's really been true for a while. There are some signs that things are starting to improve in the construction sector. It's been a really challenging sector for 5 years at this point. The pandemic made it a lot more expensive to build. It's been very hard to find labour. It's taking a lot longer to build homes. Those things look like they're starting to improve, but that hasn't yet translated into our ability to actually build homes.
I'll tell you what, it is astonishing because the one thing that I've seen in regional New South Wales, I know the story is true in parts of regional Victoria as well, is just land developments going on all over the place. So we talk about this lack of building, but in certain areas, there's plenty of it around, there is no doubt. Angus Moore, always good to chat to you. Many thanks for your time today.
A pleasure. Thanks for having me, Russ.